UAW ramping up its demands from automakers, pressing for a 40% pay increase ahead of the September 14th contract negotiation deadline and meeting resistance from the Big Three. For more on the likelihood of a labor deal, let's get to Phil LeBeau. Phil.
Melissa, this is a starting point, but boy, what a starting point for the UAW. You mentioned a 40% increase in pay. Here's how it would shake out. A 20% signing bonus when the contract would be ratified. And then the UAW wants a 5% raise per year over the 4-year life of the contract. They also would like the members to work 32 hours instead of 40 hours a week. Make the adjustment on the hours, comes out to a 46% pay increase. In justifying the request or the demand for a 40% increase, the UAW said the CEOs of the Big Three saw their pay rise 40% on average over the last 4 years. We believe UAW members deserve the same, if not more. As you can imagine, the Big Three don't exactly agree to this. In fact, when I've talked with a few people, they've said, this is nuts. It's not going to start at that. By the way, if there is a strike, this is what it would cost, an estimate of what it would cost each of the Big Three per week. Up to $770 million for General Motors, $470 million for Stellantis. By the way, that comes to us from Bank of America. As you take a look at shares of GM, Ford, and Stellantis, keep in mind that the contract, it goes through periods like this where you will see a big demand from the union and then pushback from the automakers. We know that they're not going to get a 40% raise, Melissa, but compared to where I've seen them start in the past, this is way up there, which tells you it's going to be a costly and it's going to be a contentious negotiation, which is what we've been expecting for some time.
Phil, just to clarify, though, they get a 20% signing bonus, which is a one-time payment, and then the 20% increase is the recurring part of the picture. So it's really not a 40% increase.
Overall, yeah. It's not 40% overall, but that's how you get to the 40%.
Right. Got it. Phil, thank you. Phil LeBeau,
and just so you know, Melissa, real quick, just so you know, Melissa, there are signing bonuses in the past, but they're not 20%. They're usually $10,000, $11,000, $12,000. Yeah, it's quite a starting point there. Phil, thank you. Phil LeBeau. Guy Adami, even if they meet in the middle here right off the bat, it's still a big increase.
Exactly. And it speaks to, I mean, we can talk about the individual stocks. It's not necessarily about that, I don't think. It's more about the problem. Think about this. How inflationary is that? Now, this is just sort of anecdotal, but we've seen this now across the swath of different industries and different unions. And it speaks to this sticky wage growth that the Fed is clearly trying to combat. They're swimming uphill, which, again, is one of the reasons I think they're as hawkish as they are. And I think one of the reasons people are underestimating how sticky inflation is. Teamsters, auto workers, writers, actors, it goes on and on, Bonawyn.
Yeah, I mean, to kind of take a page out of Guy's book, you know, you're talking about like the wage growth. We saw it come in, I think it was about 10 basis points higher than consensus. And then this just speaks to that. So, I think that we are kind of putting the cart before the horse in terms of saying definitively that the Fed is done with this inflation fight. With that said, you know what? I think if I have to pick one of the names that I think this actually bodes positively well for, it's Tesla, because they still have that pricing pressure and that's a lever they've been using. So until they're able to kind of deal with this, I think that Tesla still kind of, you know, ends up winning in this in the short innings.